Hi, and welcome to Crypto Meta, where we talk about crypto and beyond. All right, are we looking at a bear trap or a bull trap? We see, if we zoom out here a little bit, that we are working from a descending wedge here. So at one point, it looked like it had broken out, and in fact, it had broken out. We also went below a critical level of support at about $36,000. And now we're back up inside the wedge and above the support line. Now, this support line is a fairly critical line. Let's zoom out to the 1 day and get a better perspective on everything, because this support line that we're above right now is held up by this point here and a couple of smaller points right here. But this is the main one that held, and we're hoping that this holds again and that we pop up. If all goes nicely, this will hit here, find some support, and bounce off, and we'll make a bunch of money going on the upside. But before we get too excited about that, let's make sure that we keep ourselves in check a little bit and make sure that we don't put ourselves in any appropriate risk. So what we see going on here is a pretty big wick. Let's zoom into the 1 hour. And on a whoops, let's try that again. On the 1 hour chart, if we zoom in, we see that this hit 32.9 this morning, and then immediately proceeded to go up, and it looks like, as it stands right now, it is accumulating above this point of resistance. So with any luck, it'll hold this. This will be the bottom, and we'll go up from here. But before we get too excited, we want to make sure that we've got some confirmation here. I've made this mistake myself so many times. This can be a bear trap. A bear trap is when it goes down and everybody thinks that it's going to keep going down, and so they sell off. It could also be a bull trap, where it goes above this point of resistance and everybody buys and takes long positions thinking that it's going to go up, but it goes down. So what we want to see, one way or the other, is some kind of a retest, either of support or of resistance. Ideally, what this will do is it'll come here and kind of go down a little bit, and then eventually bounce off and make a very decisive move and easy to see decision that it's going up. But it could also do this. It could go straight back down to here and go for another lower low and consolidate around here. So that's the thing that we want to try to figure out. How do we know? Well, let's take a look at a couple of things. First off, I want to zoom out and I want to draw your attention to something that we just got to keep, keep drawing those lines here. We got to keep in the back of our head as we're looking at all of this. Let's go to the 1 day chart and we will zoom out here. So what we see is a couple of patterns that have played out. First off, this pattern here is a descending wedge, and we broke out down to the downside of that pattern. So that's not particularly good. Suggests to us that we've got potentially a more downside. We also have a broken head and shoulder reversal pattern. We got the left shoulder, we got the head, we got the right shoulder, and we got the neckline right here, which is also the same thing as the resistance for the long-term trend. It broke down on all fronts. It also went below this line of support for at least a little while, which suggests that it might go do that again. And one of the things that I've noticed over looking at charts is wicks like to be refilled. So if we take a look at this wick right here, this long wick on the candle, it came back up, but it worked its way down in order to what I call refill the wick. And we've got this down wick here, and the graphs like to go back and refill those wicks before they come back up. We've got a little exception here, but that's a small wick. This is a bigger wick, and again, we see while it came back up, it went back down and filled that wick. We've got another example on this one here. Really long wick, comes back up, and everybody gets excited, especially as it goes up here, but charts like to refill the wicks. So we got to be prepared potentially for this wick to get filled. Now, if this wick gets filled or met again, what resistance do we have at that point? None that I can really see. The next major point of resistance is 28,800 based on this support, this support, this support, this support, and that support. That's a lot of touch points on this line. Now, it might be a little bit higher, it might be a little bit lower, but I have some concern that it could come down to here, which is why I'm going to wait to personally take any moves. Now, there's another piece of the puzzle that I want to draw your attention to. So if we zoom out here, right here, I've put an X. So this is what the chart looked like up until, I'm only on the Binance one, so I can only see back to 2017. And at the height of 2017, we got to 20,000. And it wasn't until 2018, and in 2020 is when we saw the price of Bitcoin first go above 20,000 again. But here's the thing, right here, where this X is when the CARES Act was passed by Congress and when the monetary M1, the Fed, started printing dollars like it's going out of style. So it took about from March, April or so to somewhere in the vicinity of October for all of that money to actually make its way and then be excess cash for people to invest. So all of a sudden you see Bitcoin going up in price, and this isn't a new story. We see Bitcoin drop in price as soon as the Fed hints or suggests that they're going to slow down the printing press. But the thing of it is what we got to take into consideration is this right here. So this dot here is the CARES Act, and this line is M1. It's the amount of money that the Fed started printing, or not started because they've been printing money forever. Whoops, still keep doing this. They've been printing money for a quite long time. But what we see here is they ramped it up big time when the pandemic came, and they've continued to go up. All they've ever done so far is said that they're going to go down, or they're going to reduce the amount of printing. They've also said that they're going to stop buying bonds, and these are two actions that put money into the economy. And now they've said that they're going to stop. Now, Bitcoin is tanked like crazy as a result of them saying that. And this could be a function of Bitcoin just factoring in the price, putting it in their comments into the price, and the price being reflective of that. But the thing that we haven't seen yet is the third action that they're going to take, the Fed, and that is to begin selling bonds back into the market. Not buying bonds anymore, but selling them. And they're supposed to start that sometime around the middle of the year. It's unknown when. So the thing of it is if they do that, or when they do that, they're projected to put in $100 billion worth of bonds, which means taking out $100 billion in cash. So not only are they going to reduce the printing significantly, not only are they going to stop buying, but they're also going to start selling bonds into the market, which has the equivalent of taking cash out of the market. And then they're going to have, this Tuesday, they've got an FOMC meeting, And there's some people are wondering, are they going to start coming out dovish because of all the hawkishness? But they really can't afford to suggest that things are going to get better if things aren't getting better. And with the employment rate already at high, and the price of employment, the price of employees going up, plus on top of that, with supply chain problems, price has a lot of upward pressure on it, and they can't let that go. So it's not necessarily reasonable to believe that this graph is going to go up at any kind of a rapid rate. If anything, it's more likely reasonable to believe that it might hover around here, because they are projected to take years before they finish selling off all of their bonds. So keep that in mind. Keep in mind the fact that this support level, our next support level, is 30,000, and there's not really a lot that is pushing this up like there was before. When we had this graph, the money supply and the Fed was pushing all of this up. Well, if all of that's going to get sucked back out of the market, there it is again. If all of that gets sucked back out of the market, do we go back to this level here? I know that Bitcoin has a limited supply, but if you take the money out of the market, even with the limited supply, if that demand goes down because there's just not quite the amount of cash, do we go back to 20,000? I don't know. But what I am trying to say is keep that in mind before you get too excited about diving and aping into the market right now. Make sure that before you put anything in, that you give it an opportunity to really demonstrate to you that it's going to go in one direction beyond the direction that it's going. Right now, it's a downtrend. One can say that it's a long-term uptrend, and technically speaking, it is a long-term uptrend. But we've got a lot of fundamentals that are now going to be driving this thing back down. So keep that in mind. Hey, if you like this video, go ahead and subscribe, because I put out regular videos. Also, hit the like button. It helps me out a lot and helps support the channel. Thanks, and goodbye.